So here's a chart of Johnny John. Okay. Obviously, this thing is falling out of bed. More, it's a fundamental thing, not a technical thing, right? It's the news that's out there. That being said, if we want to try and take advantage of the massive increase in implied volatility, expensive premium, okay, if we want to look at some technical reason for possibly getting in here, and I'm not saying for a recovery, but somewhat of a big support area in the stock, okay, this area right in here is some pretty darn big support. So let's call it somewhere 120 to 123. Is that fair? Somewhere in that range right there. Okay, so this is a type of strategy that the guys on TD, when I'm over there, we talk about this all the time. They like to use this strategy a lot to collect premium when volatility is really expensive. Okay, it's basically a variation of a butterfly. It's not a broken wing butterfly. It's not a conventional butterfly. It is what they call an unbalanced butterfly. And that is set up to take advantage of extreme volatility. So I just chose these strikes here this week. Buying 1, selling 5, buying 4. So when you set up a butterfly, if you want to be completely risk defined, you always need to have the same amount of units, long and short, regardless of whether those units are equivalent strikes apart, equidistant, or whether they're like a broken wing where we skew. You need to have, equivalent units, because then you are completely risk defined. Okay, so in this setup that I have here, this is long 1 of a closer at the money put, short 5, and then long 4. Okay, first off, it's a very, very wide market, but there's a little credit to this, not much. So I would never do this right here. I want to find something that has more credit to it. If we're going to take this risk, I want to be able to collect much more credit to it. Okay, this is probably about 35 or 40 cents. Okay, but let's see, and I'm going to show you guys what the risk profile looks like on this. I just want to get something where, okay, this is about 50 cents. I want to find something where we can collect a decent amount of premium, but then have that big area of support working in our favor. Okay, this one is more like 75 cents. So if we project this out here, okay, you can see what this looks like today. Okay, we don't care what it looks like today. We want to know, what does this thing look like at expiration? And now you can see where that break even starts to come in. Okay, and in this case, it's right around 124 or so. Okay, let's take this down even a little bit further here. And let's see what kind of credit we get with this. Okay, and it's all skewed because these markets are so wide right now. Boy, it almost looks like next week's markets are tighter than this week. Let's see what we have for next week here. Maybe do something for next week. Let's say look at the 126. Okay, that's going to be about 50 or 60 cents there. Do you guys understand what I am looking at here? What do you mean risk chart is blank, Roger? You guys cannot see the risk chart on the screen here? Okay. And now, of course, since we're looking at this, the stock has rallied a buck and a half off of its lows, but that's okay. The thing that I don't like about a ratio spread like this is going out further in time. Because if we're looking to collect premium, we want this to happen right away. I don't want to give it more time for something to go awry. So I really would like to focus in on something this week. Even that's no good. That's like 30 cents. So the basis is, guys, to collect premium and have some totally defined risk, and have that break-even area either at that level of support that we were talking about here or even slightly below. So, you know, theoretically, looking at this chart here, if we're going to do something here, we would like to have that level of support correlating with the break even somewhere around 121, 122. Really is where the risk starts coming in. Does that make sense? Everybody kind of follow what I'm trying to do? All right, and if that doesn't work, you know, we're not gonna force it. We're not gonna try and put a square peg into a round hole. The bottom line is we want to try and take advantage of this massive spike up in implied volatility. You know, that is the goal here. You could do that, Don. You definitely could do that. So what I'm going to just do here, I'm not going to spend a ton of time on this, guys, but what I'm going to do is just kind of play around here a little bit with some of the strikes and see what we can come up with here. And if there's something good, great. If there's something that doesn't work, we'll move on. Okay, so I'm going to go off the mic. You'll see me playing around with strikes here. If you have any questions, any suggestions, let me know. What's up?
So I was